Hey everyone, my name's Andy. I'll be your host today. We've got Kasper with us. Wanted to bring him back on. I'm seeing a lot of charts that look pretty dang good, and I wanted to get his opinions on what he's seeing in the markets. So thanks for coming on, Kasper. Really appreciate it.
Yeah, thank you, Andy, and thank you for reaching out. Every once in a while we have a little chat, and we show what we think is important, at this moment in time. And yeah, I agree. It's a lot of breakouts also in different big ratios. So I think we will look at that also. And just again, happy to be back every 4 weeks or so. It's great.
Yeah, so I wanted to get you on. I wanted to start it off. I know there's supposedly a silver squeeze that's occurring March 31st, 2025, which is we're taping this on Sunday, which is tomorrow on Monday. So I figured let's start with silver. Let's talk it up. Let's look at the charts, maybe look at some silver ratios, get your opinions on it, maybe describe the patterns that you're seeing in the charts. Um, and we'll kind of just dive and start there first with silver.
Sounds good. I will do the sharing of the screen. Yeah, good.
Yeah.
Amazing. Cool. Yeah, so supposedly, we have Silver Squeeze 2.0 tomorrow, and we can have a look what happened back in Silver Squeeze 1.0. I remember this very, very clearly because, even though it's roughly, what is it, 4 years ago, the day stands out, quite clearly, and I assume it does to you as well because we had silver up, I think, 10% during the day. The next day we dropped 8%, and that was, the high for that whole thing. And the mining sector was up. I think after was it after First Majestic up 140% at the open. It was just crazy stuff. Will we get that tomorrow? Again, who knows? I don't think so, to be honest. But again, to me, it doesn't matter because ever since we broke, and we can zoom in here. This is the monthly chart, by the way, for silver. And ever since we broke 26, to me, the path is very, very clear. That is this whole um, 5 year, 4 year resistance getting taken out, and this type of pattern here, you will find that all over the place on the 5 minute chart, on the monthly, the weekly, the daily chart. It happens very, very often where you have this kind of pause before you go higher. So once we started to break 26, and I even said that I think on your channel as well, that that is the big moment for me. And there's also some other charts that will verify that, in my opinion, some ratios that we can look at later on. So to me, the path after 26 was we will be on our way to 50. And of course, as you can see here on the chart again, nothing goes in a straight line. Not yet, by the way, but nothing goes in a straight line because you're still breaking out. You still have to come back and verify the breakouts. Again, you got to 30. I think we can go to the daily just to show again. Nothing goes in a straight line. So you can see here we actually popped 26, we ran to 30. Again, big, big, big resistance at 30. We checked back to 26, and then you can see we started to actually make higher highs and higher lows. Um, so that to me is totally, totally by the book, you can say. Um, and speaking of, the vertical lines, we talked about it last time as well. I think we are at that price level or zone where we can start to see the vertical moves. Um, because once they happen, they basically go vertical. And I do believe um, above 33 was my level. At that point in time, it can happen any day of the week where you start to see the 5% gains multiple days in a row, and all of a sudden you are at 50. Um, the obvious one here is, of course, the 35 because that is the previous high. And many great, technical analysis on X is also mentioning that 35 is most likely, when we start to pop. Again, will it happen? We will have to wait and see. But the path or the target after the breakout is still 50 to me as the big target after the breakout. And then I think we will have a standard pullback because very rarely do you break on the third. If you do, again, that's usually where you see a bit of an early short squeeze because again, silver is heavily shorted, so it could happen. But very, very often, now we go back to the monthly. You have the big high over there back roughly 50 years ago, 2011. I think we'll have a tag here, a pullback, and then we go. Very, again, this is also a pattern that you see across the board on all time frames, and often you break on the fourth. And again, a cup and handle is a very, very bullish pattern that, again, I think people are not interested. Well, you can say when you let me show the measured moves first, and then people will say I'm crazy. But again, it's just what the pattern is telling me. Again, if you were to do it on smaller time frames, it would make sense. But again, here we take again the measured moves, and again, no, this is not tomorrow. This is not 2 years from now or 3, 4 years. It will take
It
some
could be
time.
though.
Yeah,
It
yeah.
could
Look
be
at
shorter than
Coco.
what you think,
Look
is
at
what I'll
Coco,
say.
by the way. Look at Coco again. I had the breakout on Coco back in 2021 or 22, 21. It doesn't matter. And I thought, the targets, my target was going to be hit 5 years out, and it took less than 1.5 years to hit my target and to go beyond. Uh, Quite amazing. And Coco was also a heavily shorted commodity on the futures. I think it was number 8 or something like that. So it could happen. I'm not gonna, say that it is, but again, it could go quicker than most people think. Same thing for coffee, by the way. I think that's gonna go for an absolutely tear also. So yeah, very long-term projected move is that 600, 650, $50 silver. And once we get into those levels, that's also when you should be start looking at the gold to silver ratio to look at when does this end, because it's impossible to get the exact price correct when you are at that elevated prices. So the gold silver ratio is a good way to say we might be at the end of this hole, and that's when you want to swap all your silver. Well, you can do that into gold, in my opinion, because at that point you will be so low in the gold to silver ratio that gold is all of a sudden becoming the better play after that. So but yeah, 600, it sounds insane, I know, but that is just purely what the chart is telling me. And yeah.
Here's another question. As we see gold progress higher and potentially silver do a big catch up move, are you going to get a little bit scared when this thing happens? I mean, that's a big move.
Yeah, it
What
is.
what does the world look like in your opinion? I mean, is it just money flowing back into it, and it's the same world, or is this under a panic scenario kind of?
I think it's going to be a completely different dollar or euro or yen, as we know, as it is as of today. It's going to be, I think the amount of dilution and inflation that's about to come here is, a very, very scary scenario for many, many people because their pensions, their purchasing power, if they get a 2% raise at their job, inflation will be 6%, so they're basically -4, and that will happen over 10 years worth of time. So it's going to be very hard for people to keep having their way of living as they have today because everyone more or less is at a really good place, but that could change rather quickly over a small period of 10 years could happen really, really quickly.
And when you see this thing coming, what's your time frame that you think that will be in a gold and silver bull market? Do you think this is going to get out of control? Kind of like I've seen some patterns where they compare the patterns today, these big cup and handles, to Weimar Germany, and and the way that they broke out and go vertical like this, that kind of scares me a little bit. But what's your time frame? It doesn't have to be right. I'm just trying to get your opinions on it. Do you think it's going to be quick? Do you think it's going to be 10, 15 years? Like what's your feeling on it?
I think we, excuse me, I think we are at the end stage of this whole, financial system that we have been in for the better part of roughly 50 years. And when you are at the end of a trend, it doesn't matter if it's, in gold, if it's in bonds or like tech. That's usually where you have the steepest angle to the chart. And so you actually gain a lot of ground in a very, very short period of time because that is your kind of like a blow off top in that whole thing. So again, timing wise, insanely difficult. But if we, I mean, it could go rather quickly, but I would say 10 years is probably a good estimate. Again, if we get a big, squeeze in the silver, because I think silver is the famous word, the canary in the gold mine for the system. So if that really starts to gain a lot of ground, which it could do, especially above 50, of course, because that's when you're on to fresh all-time highs. Um, but it doesn't take, many shorts to be in trouble for that to escalate very very quickly. So I will say 10 years. A lot will happen during those 10 years. It might be 5 again, depending on how quickly it would happen. I can't I couldn't tell you. So
So here's another thing that slightly has me worried or concerned. Not really, not myself, but just in general for other people. When this does break out, is there any problems that maybe the COMEX and LBMA and all these kind of exchanges could maybe undergo where this gets accelerated very quickly, where maybe the exchanges have problems and people start to panic and they all kind of panic into it? Is there a possibility that this could happen way quicker than what anybody thinks?
yeah, again, I'm not a spending a lot of time on the whole fundamental thing. Of course, I know about it. I know have my knowledge, but yes, I like we saw. If one bank gets in trouble, again, it's so interconnected everything else. So if you have one bank that is collapsing or going under, all the other guys all of a sudden they are lagging whatever they owe to them, and then it could escalate. Like a little bit of a chain reaction for sure. It can. Again, we have to wait and see. I mean, we do know that I think for 1 ounce of physical, we have like 200 or something, paper
Derivatives.
ounces. Yeah, exactly. So again, it doesn't take much to have such I will not say the word manipulated, but controlled market to get out of hand, right? All of a sudden, you blink and then you go, just like you saw on Coco, right? The exact same thing could easily happen. So yeah, for sure.
So you were talking about the silver to gold ratio, um, and how you would exchange your metals. Can we talk a little bit about maybe that ratio chart? And can you do here's a quick thing. Maybe you haven't done this. Have you seen the XAG to XAU chart instead of gold to silver, the
Mhm.
silver to gold?
Yeah,
Because
for sure,
when
for
I
sure.
do it, I get this big kind of wedge formation into the corner. And that's kind of what I see over the long period of time is this kind of squeezing up to some degree. And I'm wondering if this could even give it a larger move because it's been squeezing so much. And I kind of cut through the peaks of
Yeah,
some of that
yeah, the
stuff.
peaks. Yeah,
Yeah.
for sure.
Hmm.
Yeah. I mean, it's if you want to keep it very simple, again, all the way down here, I mean, that's when you have extremely overpriced gold or very cheap silver compared to the gold. And then you have, of course, the 1980s mega high here. This is, I think,
It's
15
80
to
there.
1.
Yeah.
Yeah, 80, yeah, but that's 15 to 1 in the gold to silver ratio. And I do believe that the pendulum is going to swing all the way to the other side. And I think I showed this again to your audience as well. And I just did a long video on the Substack with regarding to what I think will happen. I did it on the gold to silver ratio because it's a bit more easy with the even
We
numbers.
could do that if you like. I mean, if that's the ratio that you like to do, that's fine. If
Yeah,
you got
sure.
that one prepared.
I don't have it prepared, but I can definitely do it on the fly. So it's no problem. It will be a simple version, of course, of what I have done here. But again, here, yes, you can see 90. Again, gold here, the ratio, only once have we been above, roughly 90. And that was during, yeah, we had a little bit of a wick there or spike there, but other than that, the 2020 was the only period where we actually had that big liquidity crunch, which this basically is, um, into the 2020, where they basically shut down the entire world, right? So what more? I don't think we will ever go above that because that was as extreme as it could possibly get, in my opinion. I mean, what else could they do in order to get that to go higher? I can't see. Yeah, who knows? A different topic, I guess. But it's yeah, I think to keep it simple, there is a very, very beautiful and very, picture perfect Fibonacci extension that I've loved to go and look at every once in a while. And that is if you take the high from that March 2020 event and the low after the big plunge here, and then you take the next high here. As long as we hold that high at 90, 96 roughly, then this whole Fibonacci sequence is just a beauty in itself because you can't see the big numbers. The alignment of it all is just it's perfect. So you have the big golden Fibonacci level, the 1.618, perfectly matching the lows of 2011. So the peak at that bull market in gold and silver. Then you have the next one, the 2.618, perfectly aligned with the 1980s. And then again, you have the 3.618, which is the 7 to 1, which is actually the physical gold to silver ratio, what they dig up from the ground. To me, again, when you have this perfect alignment, I mean, it's almost, it's just, I think that's what we're going to see. And I think we are going to see, again, not tomorrow, not in a month. We could have in a very, very short period of time where we drop below 10, so single digit, and then we will snap back quickly um, in this gold to silver ratio. So whatever gold will be at that point in time, you can basically divide it by 10 to have your silver. Again, they will not peak at the same time, so keep that in mind. But still, it's going to be when and if we give in here, I can show you my level because we are actually pretty damn close here. Once we start to trade below roughly 87, and we are now at roughly 90, I think that will start this whole thing where we start to go lower. Negating my thesis there is basically if we are to get above that channel here. If we start to spike here, though, I think we are in for a similar event. We will not go above it, I don't think so, but we are in for a similar situation like the March 2020. And I want to just scroll a little bit here, 2008. But what comes after that spike in the ratio will be, the plunge after that. So I think the destination is roughly the same, but the path here over the next 2 years, if we get the spike, will be different. But again, I think the levels will be hit no matter what. By the way, this is scary stuff going on. If you see that, that is big world,
Recession, shutdown of the
recession,
economy.
war, shutting down, whatever you can imagine. That's a bit of a different topic, going into that whole rabbit hole. But these spikes there, that's when things are something insanely wrong has happened. The global financial crisis, of course, March 2020, and what the name will be of that one if we get it, we will have to wait and see. And one thing before just one thing here. I think if you have the nerves to wait, I think the best place could be to swap your silver to gold at roughly 15 to 1. Don't be a hero and do that because you will not be able to do anything or react to it. So 15 to 1 is the lowest. And again, you can also start to do it, gradually when you start to hit 30 and below, swapping your silver into gold. Because gold down here will be the better play compared to silver. So again, that's many years out. So don't expect the Silver Squeeze 2.0 to go to there within a week. So
I also saw some other important things break out, like gold to S&P 500 or gold to Dow Jones, or just
yeah,
gold
yeah,
to the financial assets, and that's important because that's when silver generally does very well. So
yeah. True,
what do we?
true, true.
Yep. So what are we seeing here?
Yeah, I just see a somewhat of a similar, not exactly the same, but I see a very similar breakout kind of thing here, though, on the gold divided by the SPX. So you're absolutely correct here. We have been breaking out from its 2011 to 2020 trend line within that wedge, which is here. So it's a little bit offset, but still, I think the exact same. And we actually have a mega monster close here in the ratio. And again, we have 1 day left. So what, I mean, it can't really do that much damage in 1 day. And this, again, you can see here, gold started to outperform heavily, the SPX and the Nasdaq back in 2002 and 10 years out. So we could easily be, in the same kind of period where you could have the markets do somewhat well, but gold and other commodities, because gold is the leader and the rest will follow, and actually overperform later on. But that's a different topic and story. So you can have the gold actually do better than the SPX over the next half a decade, 1 decade. It's a massive breakout, and you had similar again here, again over there, and then you started to turn higher. So yeah, big breakout
That
in the
was the
ratio.
60s.
Yeah,
Yeah.
that was the 60s, yeah, and then they left the gold standard, right, roughly around here, and then gold just took off. So
Yeah, it looks fantastic.
yeah, it does.
Could you, I
Again,
mean, so if we were to break this down for everyone, what does this exactly mean? Are we in a commodity bull market starting right now because of this breakout?
I think it started it back in 2024 March, and I will show you why actually, if I can
Okay.
find the correct one here. Yeah, there it is. Again, this is a scary, beautiful, but very, very scary chart. This is basically gold divided by the CPI. And CPI, the numbers they get, in my view, you can easily double that to get the correct amount. But anyways, and you can see here, we have the same kind of what's it called, cup and handle like we saw on silver. And again, you had the three touches there. And again, we are right here at silver. So again, we could have the tag and then we could break out on silver like we just talked about. And we broke on the fourth. So you're actually having gold outperforming inflation. And that is typically in a period where inflation will remain high. So we're not going back to 2%, on average for 10 years. We will go back to like 5, 10, again, high numbers, high single digit numbers average for like a decade. And you will have gold actually outperform that by, again, we can do the measured move here. So like I like to call it like a max greed target. You could roughly see an outperformance from the breakout, which is 7 to roughly 50. Again, that's 7x outperformance by gold, which will outperform an asset, in this case, inflation, that is already high or will be high, but gold will do even better. And yeah, this is inflation like we haven't seen, in my opinion, since basically the bottom there when they left the gold standard. That's what we're gonna see.
So, I mean, if we were to, I'm trying to figure out what this looks like. I mean, no one has really seen this in their lifetime that's under, 60 years old or
No,
something
no,
like that.
no, no.
Um, so this is going to be something that people aren't ready for. It's completely different than the past 40 years.
Yes,
This is a financial asset to hard asset rotation, and this is going to blow everyone's doors off, right?
yes, and again, remember, ever since the peak here in 1980, you basically had, I think, roughly 20% rates. And from there on until, of course, March 2020, and then you can derive whatever you wanna say, you basically had rates going lower and lower and lower. And that event again uh, marked the maximum valuation of bonds, like the TLT, for instance, meaning we had rates basically zero or negative, and therefore we will not see lower and lower rates going on here. We will see higher and higher rates over the next 10 15 years, just like we saw in the 1970s, where you had gold go absolutely ballistic, but you also had rates going up for like 10 years, and that's what we're
Well,
going to see again. So
rates started going up since the 40s all the way to 1980. They went up for
okay,
like
yeah, okay,
40 years
okay,
if you
sure,
look.
yeah,
So that was like the end of trend. So we could go up in rates for a very long time, or maybe this is like a game ending currency move. I don't know.
yeah,
I'm trying to
yeah,
figure out. So another thing, the decline in the interest rates from 1980 all the way forward, that is the consolidation pattern. And now that we've broken out of the downtrend of the 10-year yield, now this is breaking out too.
Yeah, exactly. With a bit of a delay,
So,
but yeah, for sure. So
mhm.
it's gonna be the exact same. Gold will do insanely well, but rates will also climb higher. Again, higher highs and higher lows. Nothing goes in a straight line, you know that. But yeah, it will be stair stepping up for sure for rates. And yeah, it's again, the world is in a heavily indebted environment where they need to roll over debt every few years. And I do believe the US, again, correct me here, have like 8 trillion to roll over at the end of the year or very soon, something like
Yeah,
that.
it's like 7 or 8 trillion that has to roll over here.
Yeah, so
Yes.
they would really love to have, the 10-year or whatever it is that they are going to roll over into to drop like, from 5 to like 3% because those 2%, it's just massive amounts of money that they have to otherwise pay. And that's why it gets a little bit dicey here, I think, in the short term, because they would like to have everything crash, because then rates will come down. They can roll over, and then they are set for like a year or two or three, when depending on how long they roll over into. So, yeah, tricky times, I guess, is
Yeah, this is also a chart that I think the miners could outperform because if gold's going up faster than inflation, technically, the miners should do pretty well because that's you're basically charting the margins of the miners,
yeah,
really,
exactly,
with
yeah,
that chart.
yeah. And I have
Yeah.
a like a view on that with the miners. And that is the key to the mining sector is the gold to silver ratio, or like you talked about, the silver to gold ratio. Once we start to see those very steep, you know, uh, rips and short pullbacks and ripping again, the mining sector will be the best investment you have ever made. Because if you do the overlay on the silver to gold ratio and the GDX and the SIL, it's not 1 to 1, but you can definitely see how well it is tracking the silver to gold ratio. And again, once we start to break below 87 in the gold silver ratio, you most likely going to see the miners do absolutely fantastic. And speaking of, let's look at the again here. It only goes back 15 years, but that is a mega breakout in the gold miners. This month here closing, and again we have 1 day left, so I don't think they can do much damage, but we're definitely breaking into 12-year highs, and you're breaking a roughly 1.5 decade long parallel. So to me here, the path is going to be from 45, and the next target will be the all-time highs at 65, and then of course pull back, but then ultimately later on we will go higher. So yes, gold mining looks fantastic. If you can, withstand the volatility, it's insanely heartbreaking. You should you should be able to do some insane gains here, in my opinion, in the mining sector. And it's also a sector that we
Yeah.
haven't been investing into for like the better part of 30 years. I guess you don't see any big mines coming online. It takes 20 years to build and prepare. It's We are in a huge deficit, in my opinion. And the paper markets that has normally kept it down, I think that's gonna crack multiple ways in various metals and softs like corn and soybeans, and it doesn't matter. It's gonna be, yeah, higher prices for longer.
Have you ever done GDX to SPX ratio?
Yes, I do, and then it looks fantastic if my memory serves me well, because we also having, just gonna line it up here a little bit better. You can see here we had the internal. I don't know why it's there, by the way. It doesn't matter like that. Look at that. Again, we are breaking the 2020 highs, and we can extend it out. Look at that. So basically, again, it's not, as powerful as the gold chart breaking out pattern-wise, but to me, this is still most likely the beginning of what is this range here. Again, 10 years of basically zigzagging. I think we're gonna hit the upper, pull back, and I think that pullback will be the last one before we then start to really outperform. So even the gold miners are breaking what's that, 14, 15-year trend line in relation to the SP 500. I mean, I think the big guys, the ones, with a lot of money, I think they are gonna see this monthly close here, which is actually a quarterly close also. and recognize, maybe we should have some gold or maybe a little bit of miners because they might do better than the SPX for quite a period. So
Question of the day: GDX, GDXJ, SIL, or SILJ? What ETF do you like the best? And you don't have to be conservative. You can just say, I like this because I think it will outperform, or because I'm sure the bigger ones are starting to break out before the smaller junior ones. So,
yeah, so I think you
yeah.
actually answered your question there. I think the bigger guys initially, and then later on, like always, you will have the small guys that will do the parabolic move compared to just like we saw in uranium, right? We actually had Cameco, NextGen. What did we have? UEC. I mean, we had all the big guys actually do quite well in a very long time. Not the past year, of course, I know. But the small guys, they actually lacked. They had an initial pop, but they couldn't quite keep up. And I think we could see the same here with the big guys do well. And if you look at the big miners, they have done tremendously well for the past 1 year after we saw that initial breakout in gold. But we haven't really seen that. They have done well, but we haven't seen the big breakouts in the small guys yet. But it will come. So
Now, how about we get into platinum? Reason
the
I'm
platinum.
talking about platinum is not a lot of channels cover platinum, and I like
No,
it. So,
yeah, I mean, I did a dive into platinum, palladium, and rhodium. And again, I think again we can briefly cover palladium here without doing the chart. I think we are at the formation or the creation of the right shoulder in a huge bottom. And the neckline for that pattern is 1,250. So I think we are creating the right shoulder now. I think we saw an early break, maybe again not quite confirmed this week here or the last week. So once we start to clear that neckline, you have a measured move almost to 2K from that pattern alone. And then you have some longer time frame stuff that comes into play after that. Rhodium is breaking also some downtrends here for the past 4 years. It's breaking that over the past few weeks. And I think the bottom is in above 7,000 in the rhodium price. And then we have, again, platinum. And we are at the exact same stage like we talked about last time. I'm still waiting for 1053 to be exact. And I think above that level, which we are roughly now, let's call it 8% away from. So let's call it 10, just for even numbers. So 10% from here, getting above 1053, I think platinum will do an absolutely, I think it will happen together with silver, to be honest, almost simultaneously, could be. But then platinum will be an absolutely fantastic investment because you're triggering so many patterns. The short-term 4 year here, once you reach the targets, you trigger the decade-long patterns, so it could escalate, into very, very high prices. And you can't see my targets here once we break. The first target is always the triangle high, which I like to call it, which is the previous flagpole high at 1,300. You have the head and shoulders in here. Beautiful little bull flag in here as well. And by the way, this pattern here is the exact same as gold before it broke out, where gold had the flat top, where we have a downsloping here, but the pattern is the exact same. So that target is roughly 1,500 and change. And then you have the big flagpole at almost 1,900, which is also close to the big bear trap, bull trap high over here. And then we will probably rest. Maybe we will overperform, and then we will charge up, in my opinion, to actually go way higher for platinum. So I think, again, 1053 is just the level where everything unfolds, if I am correct in my, charting. So
yeah. Yeah, it's got the same fractal as copper, gold,
yeah,
silver had it.
yeah,
The same
exactly. Yeah,
little V shape, V check mark.
yeah, for sure. And I think actually, again, I'm not a fundamental guy, but again,
Mhm.
I wouldn't be surprised if this whole period is where they just have dried out every above ground inventory. Again, I don't know anything about it, but that's my, if I were to convert this technical into to financial, analysis, a fundamental, excuse me, I think that's what's happening. And when it dries out, or they have, again, rhodium, palladium, and platinum is mined in Africa, probably not the best infrastructure or war friendly area. Again, I'm not I don't know where exactly, where it is in Africa, and then you have Russia. So it doesn't take much to shut down any, um, supply, and it's a tiny, tiny, tiny market. I think platinum is 30 times rarer than gold. If my math, if again, I think it's 30. You know that better than me, but I think it's 30 or 15 or something like that. Totally crazy. So it's a very tiny market with a very scarce metal. So we shall see. Again, the energy is ready, just like on silver. The energy here is ready to pop again. Could it be that we are talking for 4 weeks from now and we are here? Yes, but it doesn't change my view. 1050.
Yeah, we're in the red. I'm just
Yeah, I
waiting.
think so too. Yeah. I think if you take the longer term, by the way, just we can do that before we go on. Platinum here. I think there is the platinum. This one here, you get the longer patterns, right? Look at that
Yep.
again. So
Same
again,
thing.
yeah, same thing again, 5K, potentially overperformance. So yeah, that little corner here. And I know you like these little corners. They are
I buy
identical.
the crap out of them.
Yeah, exactly. And I think it's going to do the same thing here. It's going to
Yeah.
do like that. So over the next, 5, 10 years, we're going to be at least at 5K, at least. I think we're going to, again, platinum is also somewhat squeezed, I mean, shorted. So it could go even faster. So
It's coming.
yeah, I think so.
It looks obvious to me, but that's me.
Yeah. Again, just like, if we have
An event.
an
Yeah.
event, yeah, like we talked on the ratio with gold and silver. But again,
I
to me,
just buy a
you,
bunch more. That's all
you
I
should
do.
buy into that heavily once you get, into again
Yep.
600, 500 maybe. Just buy. It hurts like hell when you do that. But again, to me, I think that's a great buying opportunity if you want some platinum really for the long term. I think that's going to be a great, great
I don't think it'll
place
get
to
down
go.
there. I think we'll break out. I
Hmm.
mean, look at the previous fractal from the last squeeze. It didn't do a big false breakdown. It
No, it
just
didn't.
went.
Yeah,
So
yeah, and I
I'm
think we
not
had the false
convinced that it has
breakdown.
to do that. Yeah.
Yeah, I think we had the false breakdown. And yeah, you're absolutely correct. The fractal here again, talking fractals.
Yeah.
Again, it's just the exact same little thing going on with that whole thing. This box here, that box there. I mean, it's
Yep.
basically identical. So I completely agree, and hopefully it will play out the same way.
Yeah. I would love for this to go way, way up, even to
Yeah,
break that entire channel.
yeah, exactly, exactly. You could have that, if it breaks, you could have that moonshot where it does
Yep.
a
Okay.
lot of ground within a very, very short period of time. But you should sell into that very often, by the way. So. And yeah, we talked about rhodium. Again, no one is talking about rhodium, but again, look at the price movement from 2000 and like 17 here into the highs. It did 4,300%. And of course, it has come down from those highs. But to me here, some early signs of a break. We broke on the fourth again here of this rail, breaking out. I think the bottom ceiling is at roughly 700. In this case, it's 7,000 on the exact price. And once that gets taken out, I think we're gonna, grind it higher as well. Um, so yeah, rhodium, rhodium.
Yeah, it's gonna go. These all look ridiculous. Every single chart I look at, I'm like, this is going higher. This is going higher. This is
Yeah,
going higher. Like they're all kind of squeezing up into corners, ready to go, and breaking big. Like cup and handle in silver. This downtrend here in rhodium that also has
yeah,
a double bottom,
yeah. Exactly,
which always
exactly.
happens at bottoms. Yeah, the double
Yeah,
bottom there. It was in copper. It's in all these different commodities. Rare earth metals had it. I think uranium even had it, like URA and stuff.
yeah. It does have the exact, more or less the exact same. And again, if you overlay the URA chart to the silver to gold ratio, you can see that it is also tracking that ratio. Not as good as gold and silver miners, of course, but it is still definitely there. You can do it for copper as well. It is, again, the miners are tracking the silver to gold ratio. So when that rips, miners is going to be all over everyone's lips, in my opinion. Not initially, it will come, but yeah.
Are you already positioned in the miners, or are you going to wait for the breakout and then position?
No, I've been buying miners ever since we broke out. Like I had a position from 2020, and when we broke out in the gold to when broke basically gold broke out in US dollar terms, but also broke out against CPI. You could see that that was when the miners started to actually do to appear more strongly in their moves. So yeah, I've been buying or adding the last year or so, waiting for
Gotcha.
that big flush in the ratio, in the gold to the ratio, which is roughly 87 in my opinion, 88 to 87.
One, I've got one last question here. We've been charting a lot of ratios against the SPX. Can we pull up the SPX and do you think it's going to roll over? Because we put a lot of stuff against it. Let's just do a chart real quick of SPX to see what that thing looks like.
Yeah. First off, let's just admire how, again, I mean, come on, that's really, really, that's amazing, right? To to have such, basically, yes, we had some volatility here, but other than that, it has basically gone straight up. Again, same thing here, basically gone straight up. So again, calling bottoms and tops is just insanely difficult. But I will say this though, again, the shorter term channels, in this case, I'm mentioning roughly a 2-year channel here, could be again breaking as we speak here. The long-term stuff is still okay, but I do believe that this, for now at least, is a local top like that one. So until we start to see again, let's play with some setups here. If we are to get that crash, like, well, I'm calling a crash from again, that's when things get difficult. But for now, I'm not in the camp that we're gonna crash. But it does look very top heavy. So again, we shall see. I have again the chart will let us know what is in the cards. But yeah, so it could be that we're in for again. We have been looking at gold to the SPX, so gold will outperform. But it could be that the SPX will just do, let's say like that, just to draw something right over the next 5 years, and gold will outperform that big time. We saw similar in the 1970s ish. Yeah, or it could be that big, inverse of that whole thing. If I just gonna remove that stuff just so people can see. So again, if this is a topping pattern, again, it could be also that, but we have to wait and see what the chart is telling us. But
And
the
then it's a
short
head
term
and
here,
shoulders top.
yeah,
I'm
head and
just
shoulders
kidding.
top. Yeah, again, if it happens, we have no idea. But if it does,
Yeah.
you definitely don't want to be long. If that happens when we break the neckline. But for now, short term at least, bearish until proven otherwise. But yeah, it does look like, I wouldn't say blow off top, but yeah, again, it could, again, we are in a high inflation environment, and yeah, we shall see. It's difficult to predict, tops and bottoms. But I would, again, gold to silver, gold to SPX ratio, gold is winning as we speak here. So yeah.
Yeah. I mean, that's all I've got for questions. If you want to share anything else, you can share what you'd like if you want to.
I think we can do one more. Again, the SPX divided by
Sure.
the HUY. Again, to me here is also, again, I just done this before we went on. For some reason, all my other stuff has been deleted, but it is what it is. Um,
Mhm.
and again, here, just to me, this is the bottom in 2011 in the ratio, meaning this was actually when the HUY, the gold bucks index, outperformed quite massively. And ever since, the SPX has done better, but we did have a big trend line break here. And again, that means to me that the mining sector is the better place to be. And we are most likely at least going to see that move initially. And when and if that breaks, again, it could break on the 4th. I mean, it's going to be a way better place for the miners to be in compared to the SPX. So yeah, I think the GDX is breaking out against the SPX, and you have gold as well. I think that's two very good benchmarks, and we're very early. So again, we don't have the full momentum behind us, but as we start to make these higher highs and higher lows, the momentum will become stronger and the rotation will come eventually.
Yeah, I agree. I think it's all coming. It's uh it's exciting. a little bit
That's scary.
scary,
Yeah.
and that's kind of where my thoughts are at. Yeah, you've got gold there.
Yeah, I'm just like you said here. I think gold, again, gold is always leading. And again, it started to lead again roughly 1 year ago. And we have done again 50% in a year in gold. That is, of course, nice to see as a gold investor, but it's also very, very, very scary, like you mentioned, to have 50% for gold in that short amount of time. So yeah, gold ha has led here and is showing all the other metals and commodities that hey, you can whenever you're ready, you can start to actually also do the climbing and the breakout. So yeah, I think it's fully aligned basically.
That's the scary part for me.
Yeah,
Gold's the leader, and it just went up 50% in a single year. Most everything else lags gold by like 12 months to 18 months. And we're like
yeah,
right at that time frame where we could start taking off.
yeah,
Um,
exactly. And I just
yeah,
did
it's kind of, I think it's
I
kind of
did,
like the earlier move, right? Like in 2001 or 2000 is kind of like where we are today.
yeah, this one here or that steep angle or
I
maybe a
think
bit
even
earlier.
earlier,
Yeah, 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 it could be.
like we're early in this move.
Yeah,
Like it's 2001, it was 2023 or 4,
yeah, could be.
2001, even earlier. And
Yeah,
that's
it could
that
be.
initial kind of move up.
Yeah,
On a percentage basis, that's a pretty big move for gold in 2001 onward. Yep, down
yeah,
there, that
yeah, yeah. That's
bottom.
yeah, like $200, $300, and then you went to like
Yep,
four or something. So that's a big move
those
for
are
sure.
big percentage moves down there. And
Yeah,
I think it's
yeah,
kind of what we're doing now.
yeah. And again, people are talking if gold will correct and correct heavily. I think it will at some point in time, but I do believe that the name of the game, let's just do some theory here, is still higher highs and higher lows. Uh, we are in a
I
massive, massive, massive uptrend. So
I would not try to time this
no,
at
no, no.
all. I just stay long and let it go. That's what
Yeah,
I'm doing.
exactly. Again, to me, play the ratios. They will tell you when to get out. So that's again,
Hmm.
pricing wise is difficult, but the ratios they are, that's basically the cycle swifting or changing. So ratios between the SPX, gold to silver ratio, and all that, they are a good guide, and you will never buy sell the top or buy the bottom. That's impossible. But you will most likely ride the 70 or 80% of the move if you play the ratios well.
Yeah, and gold just broke out against SPX. I mean, this is just the beginning of the move, in my opinion.
Yeah, and I
So
think also it broke out against the Nasdaq, right? If I'm not mistaken here, I could be wrong though.
yeah, I'm sure. I'm sure
Oh,
it's
it
broke
has
down against
broken out.
everything.
Yeah, it has broken out as well. So again, we are outperforming tech. Gold is outperforming tech, which has been by far the best investment for like since yeah, like a decade or a decade and a half, and gold is breaking that. So
Yeah, and this is when all the other commodities start going too.
yeah,
They
yeah,
all start outperforming.
yeah. And I think the last one here, again, we could go on forever. You have again XLE divided by the XLK, which the XLE is the energy sector, and you have XLK, which is tech. And yeah, you had a big head and shoulders here at the bottom of 2020. Massive surge, huge wedge, quite kind of long. It is what it is, but you're breaking again here. So energy, and again, energy and gold is very linked together. And again, you're breaking out in energy against the tech. So
Energy is going
yeah,
to rip. Energy is
yeah,
going to
it's
kill it. Energy and precious metals. They're going to
yeah,
kill
they
it.
are linked, yeah, for sure.
They're going to kill
And
it.
again, energy is also by far the biggest contribution to inflation, which we talked about will be high. So therefore, energy again will be scarce and go up in
Crush.
price. You're talking gas, uranium, you're talking coal, you're talking whatever. So
They're all going to crush.
yeah, there's so many good things going on here if you are a commodity investor, in my opinion. A lot of good breakouts happening. So again, let's see when and if again it will happen. We don't know, but it looks fantastic. But nothing is 100%. So, but I like my odds, let's say.
Yeah, I do too. I don't have anything else. I don't know if you have anything else that you want to wrap up with, or anything that.
No, I don't. I don't have a chart, but I just want to tell your audience that they should look into coal because it is at a major support at roughly 100 on the Is it the NCF? Yeah, I think it is.
Newcastle Coal Futures. Yeah.
Yeah, exactly. Yeah, I think massive support. If that holds, there should be an amazing buying opportunity coming into the summer. Like 3 months from now into various stocks and even the metal itself. So look out for coal. I think it's no one is talking about it, understandably so, because it has been killed for like 3 years. So coal at around 100, if it can hold here, massive move, a bounce incoming, in my opinion, for coal. So that's all I have.
Good.
So
Good. I agree with coal too. I actually like it here
yeah,
very much.
it's down like 80% or so. I mean, how can you not, right? It's or
Yep.
90%, whatever it is. So
It's one of the most leveraged plays to a commodity bull market. it's
yeah,
a great entry point.
yeah, and I think gold was the best investment in 2022. The BTU
Yeah.
one did like I have no many multiples. So
All right. Well, that's all we've got for today, guys. So thanks, Kasper, for coming on. Really appreciate it. Put in the comments section. Thanks, Kasper, for showing up and sharing all this information. So if you want to share anything else, Kasper, you can. But that's all I've got for today.
yeah, just find words again. Uselink INV, Substack, Twitter or X, and YouTube. So Uselink INV. That's where I do my work and try to show people what I see and how I play this and try to do the best that we can. So thank you.
All right, guys. That's all we've got. We'll catch you next time. See ya.